Yes. Next. Firm's cost of capital is the average cost of all source of fund, borrowings, all share capital, all borrowings and debentures, bonds and debentures, all source of. Clear? Good. A is the correct answer. The company has financial structure where equity is 70% of its total debt plus equity. Its cost of equity is 10% and gross loan interest is 5%. Corporate tax paid is 30%. What is the weighted average cost of capital? So first column, source of fund. Here you go. Source of fund what? First column, kindly note it down. Source of fund. Under source of fund, equity and debt one by one. Equity and debt. Second column, cost. Under cost column, equity how much? 10%. Interest debt fund 5 into 100 minus 30%. Right? I think what 70% on 5. How much 70% on 5? 70% on 5. 3.5. Multiple with the proportion. What about the proportion? 70% for equity, 30% for debt. So 10 into 70% plus 3.5 into 30% comes to 8.05 is the weighted average cost of capital. Right? Easy or not? In examination with less time, you can able to compute. Next. The cost of equity capital is all of the following. Cost of equity share capital is all of the following except A. The minimum rate that the firm should earn on the equity finance part of the investment. B. A return on equity finance portion of an investment that at worst level the market price of the stock unchanged. C. By far the most difficult component cost to estimate. And D. Generally lower than the before tax cost of capital. Lower than the before tax cost of capital. So what is the correct answer? Except Leah. The answer is what? D. D is the correct answer. Next. What is the overall, that is weighted average cost of capital when the firm has 220 crores in long-term debt, 4 crores in preferred stock, and 16 crores in equity shares. The before tax cost for debt, preference stock, and equity capital are 8%, 9%, 15% respectively. Tax is 50%. Find back. First column source of fund. In that source of fund, debt, preference shares, equity shares. Second column, cost 8%, 9%, 15% into 100 minus tax rate 50%. Are you able to follow? Third column, ratio 20 by 40, 4 by 40, 16 by 40. So multiply and find weighted average cost of capital. $20 by 40 into 8%, 4 by 40 into 9%, and 16 by 40 into 7.5%. Total comes to what is the answer? 8.9. D is the correct answer. Got it or not? Understood? Able to follow? Good. Come.